Hi and welcome to the channel. Tonio made a request to analyze Scotts Miracle Gro, so let's take a look. First we'll find out the dividend score, and after that we'll check the valuation with the help of fast graphs. Scotts Miracle Gro has a market cap of $3.5 billion, the current stock price is 63.77 and they operate in the chemicals industry. If we take a look at the graph right in front of us, we can see that during the last 10 years, Scotts has actually underperformed the S&P 500. Scotts is the black line, the S&P 500 is the blue line with dividends reinvested. And they took off like a rocket in the booming business of home gardening and such during the last disease, but plummeted down actually far below where they took off from. Let's check their financials. So yeah, we can see the sales growth the last 5 years has been 14.5%, so that's high above the threshold. Next up, the earnings per share has been 17.8%, also extremely strong. But the analyst expects some weaker earnings ahead, 7%, just a percentage short of the threshold of 8%. The return on capital is really good, 13.58%, so that's a check mark. We can't calculate the debt compared to the free cash flow they're generating because there were no free cash flow last year, unfortunately. Now some yielding data. Extremely nice yield at 4.13% for the dividends. And last year they actually bought back 0.72% of their shares, so a combined yield of almost 5%. The payout ratio is a bit high, 64.5%, but still under the threshold of 70%. If you want a lower payout ratio though, this might be in the upper limits for you. The dividend growth rate is barely a check mark at 5.4%, and they have been growing their dividend for 12 consecutive years. So we can see that all in all we actually have a score of 8 out of 10, not too bad. Now for the valuation. Here we have Scotts Miracle Gro in fast graphs. The orange line is their earnings per share and the white line is the dividend. It's been quite a ride the last couple of years, and yeah, with this volatility you want some high returns. But unfortunately, if we look at the right side, we can see their annual earnings growth is only 4.5% for this 18-year period. If we also plot the normal PE, which is about 18, and the current price, we can see that it has come down a lot from almost $250 down to just 63. So that's also a big concern for me, at least. Do I really want to own a company that goes from 250 down to 60 in 2 years? I'm not sure, but if we project out to late 2025, we can actually see analyst expects an annual rate of return of above 18%, so not too bad. Let us also check how the analyst scorecard is. And here we can see that the analyst of course had some trouble the last couple of years to predict Scotts earnings. They did okay for the prediction between 2019 and 2013, but overall we have about 30% beats, 40% hits and 30% miss. So looks a bit tricky to evaluate their earnings. Please hit the like button and also watch one of my latest videos where I recommend 5 stocks for November. See you soon!